All right, everyone, here we are with another video with Invest for Tomorrow. And to all the first-time viewers and investors, welcome to the channel. And to all the subscribers, welcome back. So I want to go ahead and share with you guys a short clip here of two gentlemen. We have Jeff and Scott. They're going to share their insights, and I want you guys to be aware of them, okay? So the first thing I ask for you guys is to hang on tight. I don't like making these videos, and I don't like talking about, the turbulence of the market. I like to focus on plays that are going to go up. I like to focus on chart analysis to help as many investors as possible. But you guys want to be aware of this. If you are an investor that's been in the market for less than 3 years, you are still a beginner, and it's something that I go based off of my own experience. I took 4.5 years before I bought my first share, and I honestly spent a lot of time studying charts, spent a lot of time studying the behavior of the markets within different periods of time. I studied everything that no one really tells you about because it's all out there, but no one talks about it. And unless you really dig deep, you'll find it. And I just studied all the different indicators and everything I could to understand the markets. And I'm here to share with you guys my insight, my opinion on what they both have to say. And all I ask for in return is for you to smash that like button to let me know you watch this video. Share it with a friend so that they're aware of this as well, and anyone in your community. And yeah, let's jump right into it. So here we are, and we're going to listen to it, and I'm going to, pause it as they speak.
For the futures outlook, Treasury yields, they are edging higher as we speak. As that two-day Fed meeting begins, Scott Nations and Jeff Kilberg are here with us now. For more on that move, do you have where's the direction here now, Kilberg? We have too much momentum to the upside. Is Jay Powell going to say something today or tomorrow that's going to make the difference here?
I think he is. I think he talks and walks yields down. But similar to the fireworks we saw at the beginning of your show, talking about 20% pullback, I want to stick with that 20% pullback theme, but I'm going to apply it to the 10-year note. I'm looking for yields to go back down to 1.28. And how are we going to get there? It's an old vernacular from the floor, Judge. It's back and fill. I think on the charts, we saw those futures sell off dramatically. And, of course, futures are inversely related to the yield. So I think we see a back and
So we could see here how it says yield flat ahead of the big Fed meeting. I want you guys to remember that because I'm about to share with you guys what I really believe is flat, because they're showing you here a really short period of time, like within the same month, that things are flat. I'm looking at this from the bigger picture, and Jeff stated that futures are the inverse to the yield. So he believes futures are going to keep going higher and the yield's going to go lower. Now, if futures keep going higher, that means there could be a very bullish outlook in the market. And I'm going to share with you guys something that is very interesting to me. And I definitely recommend that you guys look up a Bank of America article that was posted today, how they state that the S&P 500 can surge 8% this year. So look that up as well if you can find it. And if you can't, just comment down below, and we'll go ahead and see if we can find it, or I'll do a video on it. But let's listen to this.
fill up higher in the futures, which is going to bring those yields down. But yes, you're absolutely right. Fed Chairman Powell, he will be the catalyst.
Okay, Scott Nation, is that how you see it? Yields coming down? He's going to talk them down?
I'm looking at fundamentals, Scott. And Killer and I could not disagree more on this one. And I think it's all about supply. When you look at the fundamentals, it's about time. Last week we had huge supply, well more than $100 billion. Today we're going to get a one-off 20-year, $24 billion worth of that. And Scott, on Thursday, we're going to find out what they're going to sell next week. And because the longest duration, longest maturity next week is only 7 years, the total number for next week could be $150 billion. That would be huge. And so I think supply is going to depress bond prices, and that's going to increase yields.
So he believes that, and this is Scott, he believes that the supply and demand are not in the same place. They're inverse. So basically, supply of these yields, or bonds actually, are so high that the demand is low, pushing yields higher. Because if the demand is low and no one's buying bonds, then the yields are going to go higher. They're just going to go higher so it can attract more bond buyers. So he believes supply is so high right now and the demand is so low that yields could push higher. Now they say here, and this is very interesting, it kind of correlates with the futures that we have Jeff talk about. And Jeff believes futures are going to go higher, but it says here stock futures, mixed, Dow, and S&P 500 closed at record highs. So basically they're saying, well, the stock futures are mixed. Now, this is a week where you could find out that the stock futures are mixed because we are in a triple witching week. And that's something that I would definitely recommend every single investor and viewer to do more research on. But it's the expiration of contracts, of futures, even different options and stuff like that. They don't all go ahead and expire at the same time, but they all have some type of correlation at expiration at the same time within this period. Now, not every single one of them, but a big mass majority of them. And it creates that type of volatility that we're going through this week. I don't know if you guys noticed yesterday how fast the market fell down and how fast it came back up. It almost did a V within one day. And then today it was a little bit kind of stagnant and pulling downwards, but that's because the Federal Reserve is speaking, and we're going to have to see how things play out moving forward. So very interesting. And yes, the triple witching happens on the third week of every 3 months, I believe. I think it happens 4 times in the year. Do more research on it and you'll see. And we're going to have to see what happens on the 19th moving forward. But if volume is high on the futures, then that Bank of America article, is going to be probably correct. And I could see something like that happening. But we have 2 approaches here. We're going to have to be aware of them. I believe supply could continue to be kind of just sitting there. And at some point, there's going to be investors or bond purchasers that will start to buy bonds, and the supply is going to go down. The yields might go down or kind of level off, and then the market can actually accept it. So I want to share with you guys here the yield and how the market has accepted it already in such a short period of time. So I don't know if you guys remember when it said the yields are flat, and I said it was showing it in such a short period of time. I believe that this is the definition of flat. They're kind of going back to before, the turbulence of last year in March and everything going downwards. And the reason why the market's taking it kind of negative is because it's such a shock that this is running up from here to here so fast. And at the beginning of the year, it's ran up like 0.6. And I think we have room to go to 0.7, 0.8, maybe even 0.9. But this is my definition of where we're kind of running flat. And at some point, the market will accept it and will stay within that area. And I could see a bullish market for the next several months. But we do need to be aware of the turbulence that we're in and that's coming ahead. So this is the perfect example of a shock, right? Because the yield spiked, and then we're going to see how the yield continued within this area and never went back down to these lows here. And you're going to see how the market reacted. So this happened on the 11th, and this is the 12th to the 17th. So let's go over here to the chart. So when we look at this, the 11th is right here. We went ahead and had a shock, fell to the 12th, and from the 12th to the 17th, which is where we're at now, but let's just stop at the 16th, we had a bull run, right? And the yield was sideways within that period. So basically, once we get adapted to wherever this is going to stop and stop running higher and kind of just move sideways, it's going to allow the market to keep going in its bullish trajectory, whether yields are being bought or not. But one thing that I do agree with Scott is if bonds are not being bought, week over week, and supply is getting higher and demand is getting lower, I mean, yields could spike and it could do these corrections. So we're going to have a lot of turbulence, for some time, but we are in a triple witching week. That's why I thought this was funny, how futures are being looked at, because they're mixed. They're supposed to be mixed, but hopefully a lot more futures are being bought than sold. And I think that has a lot to do with what Jeff is saying, because futures are going higher and the yield will start to get suppressed or just move sideways, and it's going to allow the market to continue that upward trend. Now, something I've noticed about the market is that when we are in a type of correction like we recently saw, or any pullbacks, I've seen institutional investors with my own eyes load up on shares. Now, they do sell some of their ones that they're profiting from and so forth, but I've never seen so much loading up like the ones that they've done, especially in this correction recently and even in the past, that they load up on these shares because of their conviction and because they believe they can go ahead and make their investments grow. That's the whole goal here. I want every single investor and viewer to be aware of this and be prepared. As always, guys, if you learned something new, subscribe to the channel, share it with a friend. Don't forget to hit the like button and click on the bell so you don't miss a single video. Thank you guys so much for watching, and let's make some money.